welcome on board Amitava Mukherjee, CMD Additional Charge at NMDC, joining in on the show right now to talk about where their sector and where their company is headed. Mr. Chatterjee, good to have you on ET Now. Thank you so much. First up, let's talk about the stimulus measures being announced by China. And do you really think these measures and additional measures that could be announced over the next few months will provide that structural turnaround in construction-related materials demand in China?
Well, I do hope so. It's $150 billion dollar stimulus. So it's not a small stimulus. It's good. It's a big one. Initially, of course, the prices did stabilize, but then it was followed by, they had a festival week in the first week of October. So now things hopefully will shape up. The port stocks will hopefully go up. I hope that this $150 billion dollar injection, especially into the construction industry, would help stabilize the overall demand supply situation there. And consequently, this being a steel industry where China is a very, very dominant player, I think the ripples of stability will be there across the globe as well.
Okay, so that's the point coming in as far as the demand in China is concerned. But in the short term, do you think price increase by Chinese steel mills as a consequence of these policy measures will lead ultimately to higher iron ore prices in the international market?
Yeah, I do hope so. You see, the prices had crashed from around 570 to 473 or something, almost by $100 plus in last 1 year. Now it has started looking up. I think it has crossed the 500 mark again. Once again, FOB China for HRC has been around the range of 513 or 515, if my memory serves me right. So there is an immediate effect to the stimulus package that has happened. We hope that this will stabilize. This price increase would not be a one-off fluke, but will have a longer-term stability in the days to come.
Right. NMDC hiked prices by about 400 rupees per ton in the first week of October, right? Which partially offset the impact of two price cuts taken in the second quarter. And since global iron ore prices have risen over the last few days, led by China's stimulus measures, do you expect another round of price hikes coming in?
We have already, after taking those two price cuts, we have already taken one price increase a few days back, around, I think, 10, 15 days back. So that has to at least 50% neutralize the earlier two price cuts. Things look better in India because except for HRC prices, which has not gone up substantially, the pellet prices, the prices for longs, the prices for intermediates like blooms and billets and sponge iron, they have been on the upward trend since the last 10, 15 days. Our auctions have also been fairly successful, and we see rather hopeful immediate future in terms of prices. The first price increase that we have taken after 2-3 months last about 10 days back, it has not affected our supplies at all. In fact, the demand has been rather robust, and the market has absorbed the price rise very well. So I think the worst is behind us, and I would look forward to have a continued increase of prices in the near and the distant future.
Sure, but can you help us quantify that? How much total price hike do you expect, let's say, in Q3 now?
Now, I cannot speculate on prices. It will not be correct on me. It's a price-sensitive decision. I cannot give a number to the likely increase or decrease that can happen. But yes, generally, I can assure you that the prices look on the upside. They look going north, and that is all the indications that we get from the various auctions that are held by us and held by other iron ore companies. They tell a story which is much better than it was 2 or 3 months back.
Right. Production in the second half of the fiscal has declined about 10 to 15%, right? We do understand that second quarter is generally impacted by monsoon and logistical issues. But will second half make up for the decline in the first half, you think?
Yeah, we'll not only cope up, we'll exceed our last year production. This year, of course, the rains were quite long, and we had certain disturbances so far as the workmen were concerned. There was slight issues there. Hopefully, those are behind us. Rains have receded, and we are back to our peak performance. You would be happy to know that the September performance has been the best ever since inception, and we have exceeded our last year's performance as well. So that gives us the confidence of going into H2 and exceeding our performance last year. Definitely, we will exceed 45 million ton. We are targeting 50 million tons this year. Hopefully, we will be in the very close vicinity of that target. Remember, we have additional EC capacity of our Kumaraswamy mine, which did 7 million ton last year, and we stopped producing, I think, somewhere around mid-January last year because we had touched that 7 million ton. This year, we have around 8.5 million tons EC capacity in Kumaraswamy. So we are very confident that we'll not only cross last year's production, but will be in a breathing distance of our target of 50 million ton.
Okay, point taken. So that's a view coming in as far as the market is concerned. Since you're very confident of covering up for production loss in second half of the year, what would be a reasonable revenue expectation for the full year? Because you generated 21,300 last year. So this year is 22,500, 23,000 crore fair estimate?
Yeah, I would not exactly speculate on a particular very specific number, but yes, it will be at least should be around 10%, anything between 7 to 10% higher than as compared to last year.
Right. So the last time we spoke with you, you were confident that NMDC steel will break even in the third quarter. Are we on track with that?
Yes, it will break even on a monthly basis at an operational level. Annual break even will take some time, obviously, because we have lost money in the Q1, Q2. Possibly we'll lose also in Q2. But Q3 onwards, where we will stop losing money, and Q4 will start making some money. Yes, the last of the bottlenecks in the steel plant, which was the electrification of a 5-kilometer patch, that is going to be completed in the next 1 week. And once we are able to dispatch about 2 rakes, we currently dispatch 1 rake. I think that would be a game changer in terms of both the dispatch and production level. And on a monthly basis, yes, Q3 is what we are targeting to break even, and Q4 where we are targeting to turn green. But on an annual basis, I think it will be FY26 because certain amount of money has already been lost in Q1, Q2, and I don't think that the entire recovery can be made in Q3 or Q4.
Okay, and over the long term, is company looking at generating some part of revenue from non-iron ore segments as well? Let's say gold and other metal mining?
Oh yes, we already have a gold mine operational in Australia, and we have allotment of 2 coal blocks. In fact, the company has the board has now approved of a diversification and an international strategy. So by going by that strategy, we have identified 10 minerals which we will be happy to explore and happy to which would be our area of interest. They include minerals like coking coal, they include copper and bauxite and gold and lithium and cobalt and such. We are focused on 10, and we have identified certain geographies, and we are aggressively pursuing opportunities in different minerals and in different geographies, even outside India.
Right. Thank you so much, Mr. Chatterjee, for taking the time out. Mr. Mukherjee, I beg your pardon, for taking the time out and speaking with us today. Good to have you on the show. That's the word coming in from NMDC.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.